Markets are seeing sideways action today on Wednesday, and we'll be visiting gold and S&P 500 broad equities action with Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Chris and I will be talking technical trading and analysis, and we'll be doing a live charting exercise with Chris. It'll be a fun little exercise, a fun little game. Chris, I'm glad you're here on the show with us today. Welcome.
Yeah, thanks for having me, David.
Today, everything's just kind of, is calm the right word, Chris? How would you describe it?
In the last few days, we've seen quite a bit of volatility in terms of price swings in the stock market. I think it feels like the calm before the storm, though. I think this market, the stock market, is setting up for potentially a pretty big downdraft.
Okay.
And I can show you here on the charts on the SP 500 and compare it to the leading indexes like the NASDAQ and other sectors. So you want to jump right into that?
Let's do it, Chris. Let's jump right into the SPY.
All right, sounds good. So if we take a look at these two charts you see on the screen, this first one here that's green is telling us that we're in an uptrend. The green bars mean that. And so the SP 500 has been bouncing its way up this 20-day moving average. Whenever we start to get these lime green areas, that's when the stock market is actually becoming short-term oversold. And it's usually when we start to see value hunters kind of step in and buy the market back up. Now, over the last few trading sessions, we've been seeing it trade in this very large range. It's been trading sideways. A lot of damage has been done behind the scenes in terms of the amount of sectors that have gone from strong uptrends to downtrends. And if we quickly flip and take a look, this column right here is a short-term trend, and most of the sectors have gone into a downtrend. So that's something we got to be really aware of. And, a lot of people are looking at the SP 500 to see what the market is doing. But if we actually peel it back a little and look at the leading sectors, which I just showed you that have been turning down, and we look at the leading index, which is the QQQ, the NASDAQ here, you can see the trend has gone into neutral. And in the last two trading sessions, it's gone red. And this is a pretty bearish sign on the charts. If we were to just look at this pattern, there's quite a bit of downside. We can use a Fibonacci extension and get a downside target of where this breakdown could occur. And you can see it's quite the drop from where we are today. Right now, we could see another about 5.25% drop in the SP or the NASDAQ. And that will, really spark some pretty big selling across the board. It's going to spook a lot of traders, investors. Meanwhile, it's a perfectly normal measured move to the downside.
Chris, have we seen these patterns at all in the last 6 months?
No, we haven't. We've been in a strong uptrend across the board in all the indexes and all the sectors. So this is the first kind of shot across the bow that the charts are saying, hey, the leaders are now lagging and they're underperforming. And that's not a good sign. We're seeing huge outflows in the tech sector and in all the big leading sectors. They're really getting drained. Money is flowing out fast and furious. Yeah. That's not what we want to see. So I think
you would say
we're looking at weaker prices here.
You would say this is the first sign of weakness we've seen since March 2020?
We've had some in the past. Last September was the last time we had a correction like this. So this is just the start of potentially a 1 or 2 month pullback, sideways move. Mm-hmm. Doesn't mean it's the top of the stock market by any means. It's just saying this market's overdone. It's got to cleanse itself, and it could only take a few weeks, but it could drag out for 2 or 3 months. We just have to wait and see.
Right. Well, when you're looking at these technicals, Chris, what goes through your mind when you're analyzing these stock patterns? So can we take a look? Let's take a look at the NASDAQ one more time now. Can we pull up a NASDAQ
so this
chart?
This is the NASDAQ right here. Let's go to the daily chart. Let's look at the daily chart.
So if you zoom out, obviously we're seeing. Well, if I'm reading this chart correctly, the moving average shows an uptrend. Now, I'm just wondering why at this point you're saying we've reached sort of a local top here. What indicators are you looking at to suggest that?
Right. So one of the strongest thing is to look at where sentiment is in terms of intermarket analysis. So there's a couple different layers like in the market. You kind of peel it back like an onion. So the first one is we're starting to break the 50-day moving average. That's not a good sign. When we look at it from a shorter standpoint here, this drop we've had in this sideways consolidation is seen as a bear flag. That is a bearish sign. That's a halfway move. So whatever this move was to the downside should continue the same over here. So the pattern is also showing us bearishness. And when we look at how the stock market's performing compared to gold, utilities, bonds, it's starting to give us, we're at a really close tipping point to the sentiment actually shifting to risk off. So people have been piling into the stock market for several months. We're actually seeing money start to flow out of it. And the stock market's selling off faster than the defensive sectors like utilities and things like that. And so when those sectors are actually holding up better than the stock market, that is a sign, a red flag that big money is rotating out and it's just trying to park its money somewhere a little more defensive. And so when you have those three levels where momentum on the moving average is shifting to the downside, technical patterns are breaking down, and market sentiment is shifting from being full on risk, they want to get into any penny stock, any asset, to now people are like, whoa, 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 get me out of these leaders. I want to move somewhere boring like utilities or bonds.
Yeah.
Although there has been a huge outflow in bonds recently.
That is true.
It's a big red flag.
I wonder, have you looked at specific sectors within the S&P 500 that are showing signs of strength?
There are some stronger sectors. If we were to look at some, the energy sector really is definitely holding things up.
Sure.
We've seen it buck the trend. We've seen this is XOP, which is the oil exploration sector. It's been moving higher. If we look at OIH, which is the oil holders ETF, it's been moving higher. So very strong, along with the financial sector. You look at XLF, we've just been seeing, the banking, the financials really buck the trend and go the opposite direction. So there's definitely some pockets of hotness in this market. But when you look at like the past leaders, you look at like the EV market, it's had a really sharp pullback. It's down like 20%. Same with solar. So the big leading sectors are underperforming, and some of these old big boring sectors like financials, energies are coming back to life. But the problem is, if this stock market rolls over, pretty much all sectors get pulled down with it. And that's why we've moved to cash. There really isn't a safe place to be when the stock market's not favorable for stocks. You just really don't want to be in stocks. That's the way I see it.
All right. Let's move over to the metals now. So I'm getting the sense that you're not super bullish on the stock market. Would you be would you be trading it sideways, or would you hold it? Would you be shorting it? What would you be doing?
Right. So right now, no, I don't short the stock market when we're in a bull market. Believe it or not, just when you get a qualified short signal, usually in a bull market for stocks, the market puts in a bottom. And a lot of times it'll just trade sideways and it really doesn't go a whole lot lower. So shorting in a bull market is really, really tough. Unless you're trying to pick a top, then there's actually some room, but there's no point. I don't pick tops. I don't pick bottoms that way.
Okay.
So we just stand aside on the stock market. And what ideally I would almost like to see here is the stock market have this leg down another 5, maybe even 8% or more. And that's going to create some fear in the stock market, and it's going to carry over most likely into metals. Typically, when we see the VIX spike, we see fear rise in the stock market, we see metals sell off a little bit. And I think we could get a washout low here in gold, in silver over the next several weeks or over the next couple months. I mean, we can see here that gold, this is a weekly chart of gold. It put in a multi-year basing formation. It finally broke out in 2019. And from the start of this new kind of bull market phase, you can see there's just these basic time cycles. And we've still got about 4 to 6 months of the price chopping around, trying to find a low before I think it starts another move higher. And this could coincide very well with a multi-month pause or pullback in the stock market. It doesn't mean gold's going to sell off anything significant here. It's actually at a very strong support zone. I think it's going to kind of bounce bottom and struggle for a little while until we see some selling in the stock market and people become panicky. And usually after that panicky wave in the stock market, that's when people move to gold and defensive plays. So that's when we'll see them really take off in a big way and outperform the stock market.
All right. Now, gold, you said, is headed for a basing pattern or perhaps even lower levels. Is that what you said? Could you clarify what you meant by that?
Sure. So looking at the gold chart, it's made a really strong bull market move, a bull flag. It's pulling back. It's had a multi-wave correction. You could argue there's a 1, 2, 3, 4, 5 wave correction. We're picking up speed to the downside. If we look at the daily chart, you get a feel for the kind of these cycles that we've had. You get these kind of waves of fear in the market, something like here, something like here. we're kind of right back into that area where it's made a new low, it's flushed the market out. I think we're going to start to see it try and put in some type of bounce, and I think it's going to try and carve out a bottom. When you look at this chart here, it's a very significant level. This is the whole market hiccup here from the COVID crash and the recovery. So there's a ton of volume through here, and that means there's going to be a lot of support as it comes down into that area. So I think we're going to see it try and put a bottom in. And of course, our cycle eventually is going to kind of bottom out somewhere over here. So this market could consolidate, trade sideways, try and maybe put in a bounce and a double bottom or a triple bottom, and then hopefully start to rally with the next cycle going higher.
We've already seen sort of this multi-year consolidation downwards, whatever you like to call it, this bear trend. It is technically a bear trend. And it's just continuing to go down lower. Today on Wednesday as we speak, gold's down another $19. And people are just wondering where the bottom is. Can you clarify if there is such a support level on the bottom?
Ideally, I mean, there's going to be, every decade's going to act as a little bit of a support level. So 1800 and then 1700, 1600. When you look at this chart pattern, right now we're kind of just drifting down. Ideally, we're going to find support around this 1700 level. It's kind of right through this pivot where we put in a bunch of highs here, and then the market traded above it and bounced on it several times. So this 1700 is a whole number. It's also a very significant level where price is either stuck below it or it's stuck above it. And right now it's tagged that level and it's finding support there as of today. So we need to see if it's got some traction. Now, I do feel like it could pull back potentially a little further. If we were to go to a weekly chart, we can do a Fibonacci retracement and get an idea for where gold could pull back from this last initial major run here.
Yeah,
we could see, using Fibonacci retracement, typically we see a bull flag pull back to this 38% retracement all the way down to a 50% retracement. So we're coming into this box between this purple and this kind of reddy pink line here. This is going to be the sweet spot. And, you know, that's 1650-ish to where it is now, 17 and change. So there's going to be, hopefully, that's going to act as support. Now, if we break below the 50, then it's actually losing a lot of momentum. We don't want to see it come down to really the 618. That's quite a bit of damage to the chart. It'll be definitely a significant support level. Simply, if we draw on the chart here and put a line across there, you can see not only is it a Fibonacci support level, but it's a pivot low, it's a pivot high. It was a breakthrough level and then a major low, and then we traded through there. So very significant lines. So we're looking at, 1638 is kind of the line in the sand we want it to stay. If it breaks that, it's going to 1530. These are some pretty extreme lows. I don't think we're going to get down to those levels, but you got to be aware it'll still be bullish if we go in there. We're still going to be in a full bull market. It's just we don't really want to see it pull back that
Sorry,
far.
could you clarify what you mean by why would it still be bullish if we hit down to lower levels? I'm just confused by that statement.
In the grand scheme of things, this is the last real significant pivot low. This is back in March, April. So even if we got down to these levels, we're still making a series of higher highs across the board.
Okay.
And higher highs, and we'd still be making higher lows. So we're still holding up. We're well above this bull market zone here. What it would just be is a very big consolidation. So if we were to just kind of draw a line across these, depending on where it goes, ideally we'd want for price to somewhere stay above this yellow line in order to keep that momentum. But the real levels that we want to see held is going to be right across here. We don't want it to come below 1440. And that's a long ways away. I don't think it's going to get there. I think we're really close to it bouncing bottom and correcting. But if it breaks 1440, it's in a massive, bearish phase. Really, it's just a choppy phase that you don't really want to get involved with it. But I mean, that's a long ways away. I don't see that happening. I think we're going to find support somewhere between 1640 and this 1745, and it's going to try and find a bottom over the next 3 or 4 months with this cycle low, and then work itself back up to these highs and hopefully go beyond that.
Final question on gold now. We comparing it back to the SPY, usually we see an inverse correlation between, on the short term at least, usually we see an inverse correlation between the equities, indices, and gold. Now you're saying that both of these asset classes could see more downside action in the short term, so they're moving in tandem. Is that normal?
Yeah, it's very normal. I mean, what happens is when the stock market has, for example, the NASDAQ's on the verge of breaking down, a lot of people don't don't realize that the stock market is on the verge of a 5 to 8% correction. If it breaks down, it's going to catch most people off guard because we're not seeing any real fear in this market. Everyone's buying call options. We haven't seen any pop or spike in put options. The VIX is low. It's just everyone's dumping bonds. There's no protection out there. People are just still piling into stocks. And when they get hit with a kind of a shock and awe, a drop in the market that they're like, oh my gosh, how did this happen? Or, I was not expecting this to happen. They start to liquidate everything and they panic. Mm-hmm. And we see this over and over again. You'll see gold and silver. There's only a sweet spot in the stock market when there's a lot of fear and it pulls gold and silver down very quickly. It's short-lived, just like in COVID. It just gets pulled down from margin calls, from people liquidating. They don't know what to do but move to cash. And then they rebound right away. So it's very short-lived. After that rebound, they'll typically outperform the stock market for quite a while. So it's just a short-term kind of hiccup that is affecting metals at that point.
All right. Chris, we have a fun little exercise now, and this is for the viewers who haven't done this before. It's a chart game. It's pure technical analysis. Let's take a look at my screen now. What you'll see is a chart on the screen. It won't tell you, the game won't tell you what ticker it is, what time frame it is. It'll just give you a chart like that. And what you have to do is you have to decide to buy, short, or just next bar means hold and do nothing until the next trading session comes. You want to give it a shot, Chris?
Sure,
let's see what happens.
Yeah.
I think it'll be fun. First of all, I know you like moving average, so let's put in a 20-day MA. Anything else you'd like to put in there?
You can throw in the 5-day. I like those too. They're great for swing trading. I don't know what time frame this chart is, but we'll just rock and roll with it.
All right. So let's take a look. What's your first reaction? Buy, short, or do nothing?
Let's do nothing. Let's get a feel here.
All right. Okay.
Oh boy, it's got news. It had an event. All right. Yeah. Nothing. I don't trade chop and noise, as you know, so I avoid complete chaos.
Okay.
Well, that's interesting.
Let's keep going.
Keep going.
So far it says at top here it's got a P&L of nothing because we haven't made any trades yet. But as soon as we place some trades in,
it keeps hitting resistance. It keeps hitting those previous highs and selling back. There's good volume, so I don't want to get involved. It's on the verge of potentially breaking here. Another bar?
Yeah, I'd like to clarify, this is a very short-term chart. I know you're not a day trader, but that's just the settings of the game.
Sure.
You'll see it's moving by 5-minute increments here.
Oh, okay. If it's in the morning, okay. So yeah, early morning, if you're a day trader, from 9:30 to 12 is when you want to trade. And then after that, you avoid the market pretty much.
Okay.
It's tough to see the time, but...
I just changed the layout here. My apologies. But anyway, it's the same thing.
That's okay.
So we can continue?
Sure.
All right.
All right. So we can get in here. So we could buy.
All right.
It's broken above there. We'll see. It's got lots of news. It's a pretty volatile play here, but keep holding. Like next.
Okay, we're flat now.
Yeah. Next.
Oh, it's trending down.
That's not good. Next.
We're down.
Next. So it's a bull flag. Hopefully it'll break to the upside. This is a super volatile one. Okay. Next. You can you can click it at a steady speed here. I'll let you know.
All right.
I'm looking for it to go to the upside here. That looks like it should pop and break to the upside, hopefully.
What is that blue line telling you right now?
The moving average?
Yeah.
It's telling me on average there's accumulation going on. There's people buying. The trend is up. The trend's more likely to continue than it is to reverse. So if the trend is up, that's a good sign.
Well,
you want the 5-day to stay above the 20-day in order for it to stay strong.
Well, we're up a lot. So that's now I notice you're not going in and out. I mean, that's kind of your style, right?
Yeah. I mean, I don't get in and out. I mean, I'm trying to play these swing trades. Whether it's day trading or not, I mean, I'm not looking to scalp for a few pennies. I'm looking for a pattern to play and complete. Generally, I'd throw a Fibonacci extension on there. I'd get an idea where the first target is the 618% extension move. So this is starting to break down a bit, looking a little bearish. You can keep going. Okay, so I'd get out on this next bar here. I'd be out.
Sell?
Yeah.
All right, so we're flat right now, which is, I guess, good. So do you look at the volume at all, by the way?
Yep, I do.
Okay, so I'm just moving ahead here. So we're not in the market right now.
Right. So the moving averages are kind of crossing. They're going flat or down. The 5 days below it. I'm just not a huge fan of trading, being long when they're trending down, right?
Yeah.
So now we're back into an uptrend. It's hitting some new highs. We got some good volume, so we could get back in here. We could try it, go for a run.
Okay.
I mean, it's different when there's not real money on the line.
Yeah.
But you can keep going. I mean, so just keep on clicking there. We'll keep going. I'm not a fan of the big selling volume spikes there, but every time we poke these new highs, big sellers step in. So we want to stay above that previous low. Hopefully it'll keep going.
All right.
Needs to recover. Needs to recover here real quick.
Okay, so walk us through what's going on in your head now. It's kind of trending back up.
So now we're neutral, like this. So this is a little. Right now, it's kind of in the middle of a trading range. Hopefully, it'll break higher. It's trying to consolidate. I can't see the time of day that we're trading here, but
it's 3:45 right now, by the way.
Okay, so hopefully, be a little end of squeeze here, a little higher at the next bar. It must be 15-minute bars. Oh, I see there. Date
5-minute bars.
There you go. And I'm out. Get me out. It's the end of the day. Get me out. There's the squeeze. Yep.
Game over. Masterful performance is telling you. We've got a profit of $90 on our position on a it's not
$100,000 position. Wow. Okay. Well, I haven't day traded in a while. That was fun.
So that was I kind of got your style. I thought I should have selected the swing trading option. It would have given you a longer time frame, but that gave you a okay, it's telling us the date range of 1 week, but that's not true. It's only 1 day. But okay, I sort of get a sense of your style. You buy and hold. You look for patterns to break out or break down, and then you get in. You don't sort of just trade the choppiness.
I don't trade chop. No.
Okay. Well, that was very educational. Thank you very much, Chris, for letting us giving us an insight on how you trade and giving us a glimpse of your head, how that works. Thank you very much. That was great. Sure. And thank you again for your insights on the markets. We'll look forward to the next market action and catch up with you then.
All right. Thanks, David. Take care.
Thank you, Chris. And thank you for watching Kitco News. I'm David Lin.